A very good evening, ladies and gentlemen, and a warm welcome to the show. Thank you so much for tuning into Smart 24 TV, where we drive your business. This is Financial Markets. I am Anthony Sebale, and I'm your host. Remember, this show airs every Monday, Wednesday, and Friday at 9 p.m., and we bring you the latest information regarding investment in the financial markets, expert opinion on different subject matters that do actually impact you as an investor, as an entity. If you want to make progress in your world of investment, this is the number one show to go to. Follow us on X at Smart24 TV now and give us that feedback. Be part of the show as well on our YouTube channel, that is at Smart24 TV Live. And we can interact always in the comment section as well. Now, with so many Ponzi schemes and other fraudsters evading the market, there has been a lot of fear amongst the public, especially concerning some of the legalities around the capital markets investments and the Ponzi schemes. Now, Ponzi schemes and these fraudsters are probably as close to the capital markets as they can get right now. And we are in a very tight space, especially given with the technological advancement that we are currently facing. There's so much opportunity for these fraudsters to get to you as an investor. Today, we want to delve into a topic on how the Capital Markets Authority is protecting you against such people. Have you been a culprit? Are you a fraudster? This is the show to watch, so you know what are some of the consequences you face. And joining me on set is none other than Mr. Joseph Magala Haumba, who is a legal officer at the Capital Markets Authority. Mr. Magala, you're most welcome.
Thank you, Anthony. A good morning to you.
Yeah.
And a good morning to the viewers.
Thank you so much. First of all, tell us what you do, Mr. Magala, at the authority. We know the authority as a body is in charge of protecting investors. It has always been your theme. But then you coming from the legal docket, what exactly do you do at the authority?
Well, thank you, Anthony, for the kind words and the introduction. My role at the authority is essentially I'm in charge of enforcement. And I've been at the authority for 3 years, and I've been at it for the last 3 years, Anthony.
Oh.
Yes.
So under the enforcement docket, what do you exactly do? What is your daily routine like? For example, when you go to office every single day, because what I understand with the enforcement bit is that probably sometimes you have to go into the field and look for any of these people who are in the market who are not supposed to be there. What is your day like, for example, at the authority?
Well, Anthony, our role essentially is to ensure that we catch the bad guys. We try and weed out the bad guys in our market to ensure that we ensure that the market is protected and that there is market integrity, Anthony. So that is what we do on a daily. So we do that over a range of things, and we actually apply a range of tools and tactics to be able to achieve that. Yes.
So what are some of the tactics you apply? Because these fraudsters or these Ponzi schemers and so on, they also grow every single day.
Sure.
And I'm pretty sure you find one tactic, they find another one.
Yeah.
So how do you ensure that you stay on top of your game?
Well, I'll try and break it down. Enforcement essentially is the disciplinary function of the regulatory system. What that means is that we try and ensure that where there has been non-compliance with the legal framework, there are consequences. And that is through enforcement. So we sort of detect and then punish non-compliance. Now, that is done through a range of strategies. One of those strategies, Anthony, is we could actually administer what we call the administrative penalties or sanctions. And those are essentially corrective in nature. What that means is that these are for the minor violations of the legal framework. And this could include, and some of the steps we could take in conducting administrative sanctions is we could actually reprimand the individual or entity. We could also warn them. We could issue directions to the person to make good the wrong that has been committed. So that is in terms of the administrative sanctions. But we could also actually impose financial penalties, Anthony. And that is a no contest sort of strategy where the culprit is requested to, is directed to be able to pay a particular sum of money in terms of a fine so that we can be able to correct the wrong. But we could also consider instituting criminal proceedings and civil proceedings for the violations that we consider to be grave and the losses suffered are actually quite high.
Yeah.
Yes, so those are some of the strategies we take, Anthony.
Let's talk about the administrative sanctions. You're saying that these could be a warning, sort of like, is it not sort of massaging these people, or there are specific cases which might not require, for example, the imposition of financial penalties that only require administrative sanctions? How do you go about what case goes for what sanction?
Well, we do have what we call the enforcement manual,
Okay.
which guides us on what strategy to take depending on the circumstances of the case. So I'll give an example. For example, if we are dealing with a regulated entity which has failed to file periodic returns, those we could just issue a warning and ask them to correct that wrong. But if it's something which is grave, for example, like the capital chicken matter, that would require us to consider instituting criminal proceedings. At the end of the day, Anthony, our goal is to make sure that we protect the investors. You know that investor protection is deeply rooted in securities regulation. So for us, what our aim is to be the investor's advocate. And so we determine what is in the best interest of the investors and then go ahead and pursue the best strategy for a particular circumstance.
You mentioned that you have some enforcement as well on regulated entities.
Yes.
So that means that you being, for example, a listed company, it doesn't guarantee that you will not be under the law, or you will not actually have to. Actually, I think you will have to abide by more rules and regulations,
Yes,
right?
yes.
How is that? How is that? Does that play out well as well with market players? Have we seen them comply as well with these kind of regulations?
Yes, they do. And the beauty is that this enforcement starts right from the securities exchanges as well.
Oh, yes.
In fact, it goes down even to the compliance officer at these particular entities. So what happens is, for example, you ask the issue of the regulated entities. Now, those, in terms of requiring them to comply with periodic returns, the securities exchange, of course, goes ahead and requires them to be able to disclose particular information. For example, where they fail to disclose that information, of course, there are sanctions that are actually issued to these entities. So you find that, yes, whereas we might be the ones who are at the helm of this, but it's something which is done right from the grassroots. Yeah, so essentially, it's not just CMA alone. It's something which is done right from the compliance officers of these particular entities, right to the Capital Market Authority. Yes, please.
That's very deep, because when you look at one of the things that investors really, what keeps our investors is how protected they are, how safe their investments are in the market. So if that is guaranteed, then definitely we shall have more and more investment. But let's look back. What are some of the rules or the acts of parliament that govern the capital markets in Uganda? We understand a series of amendments have been made, and I think it's, the current acts are also under amendment. However, you can give us a brief overview of what kind of acts have been enacted before in regard to the capital markets in Uganda.
Well, currently we do have 3 principal acts.
Okay.
That is the CMA Act, which is now CAP 64. We also do have the Collective Investment Schemes Act, CAP 65, and the Securities Central Depositories Act, CAP 60. So those 3 are the main principal acts that govern the capital markets industry. But we do have also a range of regulations, as you are aware, under the different acts, the different 3 acts, that also put into practice the provisions of these different acts, Anthony. Yes.
Yeah. So what are some of those regulations besides the acts?
Well, we have, for example, we do have recently in 2022, we had the Capital Markets Prescription of Instruments Regulations, which brought on board a number of products, for example, the exchange-traded funds. All these are aimed at ensuring that our investors are able to invest in various products in the market. So yes, there are quite a number of regulations, Anthony, that we do have under the Capital Markets Act. We also have the Investor Protection Fund regulations that were enacted in 2023. And these essentially are aimed at protecting investors that are dealing with licensed brokers and dealers.
Yeah.
Yes.
Why these three acts? And what, for example, we have the Collective Investment Scheme, it has its own acts, and then the CMA Act, CSD Act, which is, I think, for the fixed incomes, right? Why is it important for these to be separate? Why don't we have one act, like, let's say, the Capital Markets Act in Uganda? Is it specific to maybe speaking to these different products, like, for example, the Collective Investment Scheme, that in order for us to have a more vibrant product, we want to have it as a separate act as well? Could that be the reason?
Well, I think that could be a reason because essentially these are different products, like you mentioned. So it's important that we have adequate provisions for each of them. But also in terms of, I know it would be more user-friendly to have just one act for the capital markets industry. And because of that, the authority is considering coming up with some sort of consolidation of some of these acts into one sort of book, so that our users can be able to find all the capital markets laws in just one book. So we are working with the Uganda Reform Commission and the Uganda Printing and Publishing Corporation to be able to come up with one document that is able to provide for all the different capital markets instruments and regulations that our users can be able to utilize. Yes.
Before we can go to what can go wrong in terms of people who get their money fleeced by these Ponzi schemes and fraudsters, can we look at what kind of initiatives is CMA, first of all, putting in place to ensure that despite all these legal enforcements and so on, the market is growing? Because what kind of scares of as well investors is the fact that maybe all potential issuers is that maybe the measures are so stringent, too stringent, to allow them in, but also you have to protect the investors. So how do you bring a balance, of enforcement and thriving in the market? How do you do that?
Well, that is a very difficult balance to achieve.
Yes.
It is something we've been grappling with for a long time. As you know, the CMA has a dual mandate of not only protecting investors, but also to ensure that we develop the market. So it becomes challenging sometimes to be able to issue sanctions that might be seen as though they are too harsh, and in some sort of way they could be sort of limiting the growth of the market.
Sure.
But it's something that we try to achieve on a daily basis. So, well, we look at so many factors really. One is, could this be a first-time offender? Is this somebody who is regulated by the Capital Markets Authority? How have they behaved upon interactions with the authority? When we let you know that you've actually breached our legal framework, what is the level of your cooperation with us? So some of those considerations are put into play when we are determining what course of action to take in trying to balance that difficult sort of scenario of ensuring that we both regulate the market and develop it at the same time protect the investors. Yeah.
Amazing. And I totally agree with you. It's not an easy job to enforce and still promote the market. But that's what you have to do.
Sure.
Now, when you look at the current, schemes that we have in place, the Collective Investment Scheme has been one of your highlights, as the authority and as well as the fund management. But in your own personal view, what do you think is lacking in terms of promoting the market? Before we even look at enforcement, what do you think we can do to see that we increase awareness, we push the agenda of, investor education in Uganda? Because recent statistics show that less than actually about 2% of Ugandans know about capital markets. And it's a very detrimental statistic. We recently were at an event with FMDQ on last week. And one of the highlights was that the gaming and betting industry attracts over 18 billion every single day. And we are looking at only about 3 trillion, which we are proud of really for the collective investment schemes, but could be more, could be better. If 18 billion is going into betting every single day, we could do better. So where do you think we need to touch in order for us to see our market grow?
Sure. Well, in my opinion, I think we just need to continue preaching the word. We need to ensure that we reach as many people as possible and let them know about the possibility of investing in the capital markets. But also, I think we should also consider seriously investing in technology so that everybody is able to actually invest in the market right in the confines of their homes. I think that would go a long way in ensuring that we bring many people on board, Anthony, to participate in our market. Yeah.
All right. Now, let's look at some of the possibilities of investors being refunded if their money is lost into securities fraud. First of all, is this possible, and to what extent? In the banking sector, we have the Deposit Protection Fund, which refunds at least up to 10 million of investors in case of anything, in case anything happens to their savings. Do we have something similar in the capital markets, especially speaking to the different products, the equities, the collective investment schemes, the fixed incomes? Do we have something similar as a refund in case of fraud?
Yes, Anthony, we do have the Investor Compensation Fund, like I mentioned earlier. That fund is essentially in place to ensure that investors that have dealt with licensed brokers and dealers do have some sort of recourse where the brokers and dealers breach their contractual obligations. So we have that fund in existence. The thing is that whereas it doesn't have a limit like the Deposit Protection Fund of 10 million, that discretion of determining the limit is left to the authority. So it depends on the number of investors, for example, who have suffered the loss. It depends on the availability of the funds, or the monies in the fund at the moment when that claim is made. So yes, that is possible.
Okay.
Investors are entirely able to get a refund. However, you know, like I've always said, that that is not the only solution. Sometimes, depending on the circumstances, for example, you might find that the perpetrators have probably fleeced the money and run out of the country and gone with everything. So sometimes you might note that possibly other strategies might better serve the purpose. For example, we could actually just sort of arrest them, extradite them back to Uganda, and ensure that they face the law. That could also, in a way, credibly deter other would-be wrongdoers to be able to participate in such similar investment scams. So at the end of the day, you still achieve investor protection. But like I said, you know, we try and ensure that we have the investor's interests at heart, and depending on the circumstances of the case, we could then apply either one of those strategies or a mixture of all of them. Yeah.
Well, interesting, because when you talk about, yes, when we bring them back, we put them in prison and all that, it could protect other investors instead of us just keeping on compensating and you know, letting them thrive as we compensate the funds. But also, do we have a sort of a tracker which maybe says these are the number of people that have been impacted and these are the people who have actually been involved in the fraud? Do we have a way of tracking, for example, these fraudsters and these schemers from the beginning? Because you know what happens is with the Ponzi schemes, at the beginning, everyone is quiet. No one says a thing. You know, they earn this small money from these schemes. And then when things go wrong, that's when everyone starts coming up. But do you have a mechanism of tracing back from where this thing starts and then, you know, getting to solve it backwards?
Yes, Anthony, we do. Actually, we do conduct investigations at the authority. So we try and make sure that we understand how this scheme operates, what products they have, who are the persons behind it. We try and go back and look for all that information. And yes, once we have all that information in place, then we can be able to determine the course of action to take in a particular situation. Yes.
What is a Ponzi scheme to you?
Well, I'll just give an example. It's essentially rob Peter to pay Paul. What that means is I would just collect money from you, Anthony, for example, and promise you returns. And then what I will do is I'll still go back and talk maybe to somebody else, say for example Samuel, and say, you know what, I have this business idea, please invest in it. So when someone gives me their money, I'll then get the same money and then pay to you, Anthony, because you came on board first. But remember, I keep doing that for each and everybody. So I'll reach a point where I'll fail to get money to pay the already existing investors. And that is how the scheme falls down.
Wow.
Yeah.
And you disappear.
Just disappear. So that is what you refer to as the Ponzi scheme, really. It's an investment fraud. Yeah.
We're going to take a quick break. When we return, we want to look at the history of some of these Ponzi schemes and how they start, how they penetrate the market, how investors are hoodwinked.
Sure.
We want to know then, how do they avoid them?
Sure.
But also, what are some of the consequences of the perpetrators of these schemes? And we want to look at the specific penalties. Are they harsh enough for us to be protected? Mr. Magala, when sometime back I got robbed of 150,000 on WhatsApp.
Oh, sorry.
Because one person hacked into my friend's phone, and this person actually, we usually share money. Says, help me with this. I'm in an emergency. I'll pay you back tomorrow. It's going to use the same language, so I didn't know. So he said, I need some 150. And then my phone, I think I had 160. I sent the 150. I even put withdraw charges. Then later I wrote in the day, I called this person and I'm like, hey, but you didn't call me. Did you get the money? He's like, I have not asked for any money.
Wow.
His WhatsApp was hacked. But it's so painful. That was just 150,000.
Sure.
But there are people who have lost millions of money.
Sure.
I know it's very, very painful. So it's a very critical topic, and it's very important that we discuss this. So after the break, we're going to come back and tell us what are some of the roles of the authority in this, but also what are the penalties in place for these perpetrators, so that if they are watching, they desist.
Sure.
Thank you so much, ladies and gentlemen, for staying with us. I'm with Mr. Joseph Magala Haumba, legal officer from the Capital Markets Authority. We're going to take a quick breather and we'll return shortly. Don't touch your dial.